All right, how's everyone doing tonight? Good. Come on, give me a little louder than that.
Doing good!
You can't record on that, right? He's the real Phil guy. To introduce the moderator for our panel tonight, Mohammed Abdullah. He's a professor at USF, and he is our chief academic officer. So give it up for him.
Thank you, Chris. Thank you, everyone, for the time, for your time, and for your effort to be here. Just to give you a background, today's panel will be on the blockchain and real estate. We will discuss issues ranging from how investors currently, ordinary investors, should look at the blockchain as an interrupting technology for the real estate industry. We will also talk about the regulations, current status with the blockchain, and how blockchain is introducing new market opportunities for everyone and decentralizing and democratize the investment in real estate and open the opportunities for everyone to be here. So I would like to thank our guests here. I would give you the chance all to introduce yourself, the company that you're working with. I feel that you can speak better about yourself and the companies than I. So I'll leave it to you, Yvette, please.
Okay, cool. Hi guys. Is this thing on?
Mm-hmm. Yeah.
Okay, cool. Hi, I'm Yvette Romero. I'm engineering by undergraduate training, consultant. I work for Fannie Mae, and the reason I'm dropping that is going to become apparent in a second. And I also have my MBA, so I am partly technical, but I've also become very keen and attached to the business process and financial side of things. I'm the director of product for Bitcasas, and we're tokenizing real estate mortgages in the US. So that means we're pulling mortgages and we're passing that interest income instead of to a bank, we're passing that to our investors.
Thank you, Yvette. That was good enough. I think I will ask you a lot of questions later on, so just keep some energy. Yes.
Hi, I'm Justin. I'm the founder of Zeehaus. Just a quick background about myself. I was originally from Taiwan, moved to the US when I was 14, lived in New York, New Jersey for 20 years, and been here in the Bay Area for about 5 years. Most of my careers were focused on consulting. I was working about in the ERP space, data integrations, and analytics with Accenture before I started the company. Been here for about 5 years. Started the company in Zeehaus a couple years, almost 2 years ago, with the goal of rationalizing residential properties. So the challenge we have with people who don't have 20% down payment to get a mortgage, someone with 5% and they want to buy a house, what do you do? There's very limited options. So while we're building a marketplace to connect those home buyers with investors who are going to purchase 95%, whether it's 1% or 95%. So they can help each other and achieve home ownership and lower the costs because now investor has ownership. We'll get into more how the whole thing works, but our vision is to achieve home ownership and also help investor diversify in the liquid real estate marketplace with blockchain.
Well, thank you, Justin, and welcome to the Silicon Valley. We obviously need a lot of great thinkers and leaders like yourself and the rest of the panel. Thank you. Yeah.
Hey everyone, I'm Yev Spektor, the CTO of Slice.Market. So I'll start off with a little background on myself. Originally born in Ukraine and came to the United States at a young age. Grew up in the Bay Area and came out of school as an engineer. Went to work for Lockheed Martin for a bit, and then left to become a technology and software consultant in the startup world. And then, going down that path, ended up in blockchain naturally, and I joined Slice at the very beginning of this year, around February. So with Slice, what we're doing is we are tokenizing commercial real estate investing with an emphasis on cross-border investments. So that means opening up real estate in prime US locations, so think New York, San Francisco, Los Angeles, opening that up to individuals abroad that would never have access to these kind of deals.
Great, and this is a great effort that everyone needs. I was talking to you before. Sometimes investment in such a stable market like the United States and investment in real estate in the United States is a big potential to a lot of people from different other countries because of the problems they're facing, being political problems, being corruption problems. So democratizing the investment in commercial real estate is an important thing. Thank you so much everyone for the efforts, for the great leading projects that you're working on. Now, I would like to start asking Yvette. So Yvette, if I am a traditional, ordinary real estate investor, and you want to tell me about the current companies and the blockchain efforts that are changing and interrupting the real estate markets, how do you onboard me, telling me about the role of blockchain in the real estate? What is the problem that it's solving, and why do we need it at the very beginning?
Great question. Quite loaded.
Sorry.
So I think that we have a lot of logistical problems that we could talk about, like the fact that if you get a mortgage or you buy a house or you're going to close a deal with a bunch of LPs on either the residential or the commercial side, that you need to record titles and have, county clerks and the state and, kind of 5 different layers, and at the end of it, you're out 5%, right? And where did this go? Like, it's not going to go for refurbishing your house. It's not going to go to our operation or our CapEx. So there's a lot of logistical connectors that are broken. And I've been in the mortgage industry from Fannie Mae, which is so old school, but it holds $3 trillion worth of mortgage debt. A large portion of that is reperforming, meaning that it went bad because there were these 80-20 deals, and now they came back, and half of it maybe reperformed again. The other half is washed off, right? Just money gone. But the logistics behind sort of getting a loan, and nobody wants the loan, everyone wants the home, is just so broken, and those logistical points are not going to change until they have a motivation to do so. And I think the motivators tend to be the investors and how people think about their homes. So I would think that for somebody that's a novice, thinking about, am I moved by commercial real estate, or am I moved by residential real estate? And then further, do I like debt or do I like equity? What I think a lot of people think about equity is the upside. If the market goes up, you will have a participation in the upside. But if the market goes down, you have a participation in the loss. Now, there's also only certain markets that are going to pay you income. Why? Because rent needs to cover all the costs and all the things that could go wrong, from the toilets to the air conditioning. I also founded a property management company, by the way, in Abu Dhabi. So I've been on every sort of side of the deal making operations, and then mortgages on residential in the US. But so I would think about kind of those two groups of real estate and really start to think about how those properties are valued. And then in Bitcasas, we're taking that a step further and thinking equity is not the only bet you could take. Debt is another vehicle by which it's analogous to a bond. So you're getting these payments every month, and you have the best operator that you could possibly have in that home, which is the homeowner. And the homeowner has in their best interest to take care of that home and make sure that the equity value goes up. And all you're doing is collecting income. You get a diverse pool of, whether it's mortgages, then you're getting income, and you're reducing the risk that all of them go bad. If you put all your money and bought a $300 mortgage, for example, you got it all in one mortgage. So I think one, the operations, the logistical points I think need to be incentivized and to move, but I think focusing on and knowing what kind of real estate you like and you research and you get to know very well, whether it's commercial, residential, whether it's debt or equity or other things too, is the other way to separate it. And I would say operations is a big headache. And I think that even though a lot of the portfolios have a fiduciary duty to look after those properties, it doesn't really equate often to higher profit because it's not necessarily in their best interest to squeeze to the last dime like a homeowner would. I had one more point to add, but I can't think of it now. I'll add it later.
All right. Well, I was just amazed by the project in Bitcasas that they switched really the view of investment in real estate from you thinking always as ordinarily that if you want to make money, you have to own a property or make a rental, to you can also gain money from putting like the idea that is analogous to bonds and where you can collect really.
Can I add the last point?
There you go. See, I'm trying to help.
Diversification. So I think we all know this in equity, debt, whatever it is, diversify. So I'm not saying put it all in our debt. Don't go buy a little bit of equity, buy a little bit of their mortgage, buy a little bit of our debt, and diversify. So real estate type, debt, equity, where in what state it's in, if it's a high risk, high return, right? Because there's there's the good old risk return profile that you might want a San Francisco house and in a very high value market. Well, your return is like the sliver, right? You're making like 5 cents a month. Well, you might want to take another bet in a secondary city in Texas that might return you, in our books, even a solid bet will return you a cash on cash rate about 25%. Cash on cash return. So diversifying the kind of plays, I think, is the other thing that you want to learn how that applies. It's one way to do it in equities, there's a different way to do it in real estate.
Thank you so much. So Justin, to you, I wanted to ask you, when we started the blockchain, one of the major benefits and promises that we